Watching CST YouTube channel. Today, as I discussed in my earlier video, let's discuss about one pattern where you will get 70 to 80 times profit pattern. Before going into Harami candle pattern, let's discuss about how are these green candles and red candles are formed. Just to get an idea for the beginners, let's identify how green and red candles are formed. As we know, in a graph, this is the starting point. Let's say that this graph has fallen for some while and it raised and again it started falling down. So this is a normal graph pattern, but in the previous screen when I showing a chart where you can see candles are like this, right? So how this chart can be converted to this candles chart? If you mark a line at highest position of each and now join these two lines and also draw like this. So as this is the starting point, open price, so it is called as open price, and as this is the end point, closing point, so it is called as close price. It also went to a high of this and to a low, so now the candle is formed like this, right? So this is called as open and this is called as close and this is low price and this is high price. So this is called as a body. I have drawn this in green color because it started from low, ended at high, so this is a green candle. And this square is called as body and these lines are called as handle, wick, shadow. Similarly, let's identify how a red candle is formed. So red candle starts from higher position and let's say it went like this and it has fallen like this and again now it is started going up. So if we draw four lines, so now what is the starting point? This is the open price and now where it has ended here, so this is a closing point, and between this open and close it reached a high of this point and low of this point. So let's join these two lines first and join it in this way. So here the candle which is now formed is red in color because the open price is higher than closing price. Okay, then this is represented in red in color and this is body, these are handles, wick or shadow. Now we know what is red candle, what is green candle and how is it formed. Let's jump into our chart. We identified how a green candle and a red candle is formed, right? Now let's talk about our Harami candle pattern. So how a Harami candle pattern is identified in a chart: buyer and seller perspective. So in market there are two type of people, buyer and seller. So let's talk about buyer perspective first and then let's come back to seller. So buyer will buy at low price and sell at high price to make profit, correct? So the buyer will look for a candle formation something like this. A big green candle has to be formed. This candle usually forms when big players enter into market. Okay, now we identified this big candle. Our next strategy is to identify, we can take a trade based on one candle formation, two candle formation and three candle formation. One candle formation is at high risk, two candle formations is a medium risk and four candles formation is low risk. So let's identify three consecutive candles, then decide on whether to take a trade or wait. So now for suppose we have identified this candle in the chart. Okay, now what is our condition here to get into the trade? Our second candle, it can be any red or a green candle, doesn't matter, but for us it should be inside this two lines. Then we should wait for the third candle formation and take a decision. So usually if the green candle is formed means it started at this and closed at this position and this is the low point and it's the high point, right? So the usual formation of the second candle will be where the previous candle is closed. So this candle closed at this position, so the next candle will form at this position. This is the open price of the next candle. Now for suppose this candle has fallen for a while and it again came back and closed at this position. Here if you see, this second candle is between these two lines, correct? Now we need to wait for the third candle formation and decide to take a trade or not. So as this is the open price and this is the close price, this is the high price and this is the low price, so the next candle will start from the close price of the previous candle, so the next candle formation can be here. And for example, this is the third candle formation, but this one went down instead of going up. Okay, now this candle, where it closed here. Okay, it opened at this, closed at this, high is this and this is the low, right? So now this candle is red candle, but still this is not an issue for us because our condition is it should not cross these two lines. So this one is also still an inside candle compared to the first candle, right? Then let's wait for another candle formation and decide whether we need to take a trade or not, right? So as this is a red candle, what will be the opening position? The opening position is where it closes, so it is started from here. This is the open price, and let's say it came down and it went up and it crossed this our price and closed here. We can make this as our entry position. It satisfied our condition and we entered into the market, but now we need to identify what is the risk capacity. Like we need to identify where this should be our stop loss and what is the target we are expecting, right? So if you see, usually the big players target will be, stop loss will be first this, big player stop loss will be this, and the target is double the size of this candle, double the size of this candle. But when you see, as a retailer, this is the position we are entering, this is the position we are entering, and we can only handle a loss of this point but not this. The gap between the lower position and this is huge, so we cannot handle this much loss. So to be on safe side, let's take a stop loss at this position, and what should be our target? Double the size of this candle, 2 times the size of this candle. So let's say this is a 0 and maybe this is called 10 and maybe this is 5. Okay, this is 5. So now what is the size of our candle? 10 to 15, right? So it is a 5 points candle. So what should be our loss? We entered at this 15th position, right? So we are expecting a loss of 5, and what should be our target? 2 times of difference, 15 minus 10, 5. So our target is 15 plus 10 is 25. So entry is at 15, stop loss is at 10, and target is 25. So we have to quickly calculate these calculations and enter into the market and exit with profit. Okay. Similarly, now let's talk about seller perspective. Seller is quite opposite to what we discussed just now. We need to identify a big red candle, and then it is same concept here now again. Okay. So the next 2 candles should be breaking either of these 2 lines. Okay. Now as this is the open price and this is the close price, this is a low and this is a high, the next candle usually starts from where it has closed. So this is the point it is started. Now let's say it went up for a while and it came down, but it didn't cross our line and closed here. Okay. Now as this is inside this big candle, we have a hope that if it falls down, we'll become a seller and make profits. So let's see what is the formation of the next candle. So as this is the open and this is the close, the low and high, the next starting point is this, and now it has crossed our line. Then we got an entry here as a seller. Okay, so let's say this is 30. So now let's make this as 40 and this as maybe 20 or 30. Let's make this as 30. So what is the difference here? 10 points is the difference. So what is our entry position at this, which is at maybe 32? Okay, so we are entering at 32 and we are expecting a loss of this point, where it is of 10 points, and what should be our target is 20 points. So our stop loss should be at 40 and the target should be 32 minus 20 is 12. So our entry is at 32, stop loss is at 40, and target is at 12. This seller concept is quite difficult to understand for a beginners, but let's talk about this seller concept in another video. Now let's jump into the candles and identify these patterns. Okay, now we need to identify one big green candle first, right? Now if you see, the first candle of the day itself is a big green candle. Okay, now it is like we are at the correct position, right? Now let's see what is the formation of the next candle. So first we need to draw two lines. Okay, now if the second candle is inside these two, there is a hope that we can go into the trade. Okay, as this second candle just touched this line and formed a small candle here, which is inside this big candle, so we are getting ready for our trade. The next candle crossed this point, but the closing position is lower than this, so we will not take this trade and we'll be waiting until it crosses this line and closes. So this is not a trading position now, so we are waiting for the next candle formation, and the next candle formation is downtrend and it went down. Now again there is a green candle formation here, right? There's a green candle formation here. Now let's draw two lines at this. Okay, now the next candle is again an inside candle here, which is between these two lines, right? Now then we are waiting for the next candle. So now as we know, the next candle should break these two lines, then only we will take a trade. So the next candle has crossed this line, which means it is an uptrend and closed again above this line, so we can say we can enter into this trade. So we got our entry point here, which is at around 11,820, 11,830 around. Okay, and then what is the lowest point here? 11,825. So we are entering at 11,008. Let's make it as 40, and the lower point is 11,825. So what should be our target? The stop loss what we are expecting here is 40 minus 25, which is 15 points. So what should be our target? Size of the double the size of this candle, which is 30 points. So 11,840 plus 30 is 11,870. So we'll exit from market when we get this target. The next candle is a red candle, and again this is an inside candle compared to this one. And if you see the high position of this, which is already given us more than what we are expecting, so we can exit from here. Okay, now this has given us more than what we are expecting, and when we can exit from the market, else we can wait until it has stop loss and expect a good profits. But as we are beginners, we should only plan 1:2 or 1:1 to be on safer side and get 80 to 90% success rate. Okay, now let's say we have taken this trade and we exited here, and the next immediate candle is again between these two lines. So then the third candle formation, we are expecting for the third candle formation should break these two lines, then we'll decide whether to take a trade or not. And the third candle itself, it has touched the line and the next candle crossed, but it closed below this line, so we still be waiting for our trade. And the next candle again is an inside candle compared to this, and the next candle is a breakout candle. So we can enter into the market at this position, and let's see what happens. So now we have entered at this position, which is 11,875, and if you see what is the size of this before candle is this. Yeah, so let's take this is the candle, right? This is the first candle, and this is an inside candle, this is again an inside candle, and this is a breakout candle. So usually our stop loss at this position, which is 11,850. So what is the difference between 75 and 50? We have a 25 points difference, and so our entry is at 11,875, stop loss is at 11,850, and the target is plus 50, which is 11,925. So let's see what happening here now. The next candle is again an inside candle where we have entered, and the next candle is a breakdown candle, but the thing is we have a stop loss of 11,850, and it came close to 11,840 and to 48, and it is a good idea, if it hits the stop loss we should exit, but not change our stop loss to below levels and make our trade risky. We are in a mindset that we are expecting a 50 points profit and a 25 points loss, so you should stick to that and trade accordingly. So it came to 11,848 and it reversed, and if you see, this is a big candle, and this is a breakout candle, and this is a breakout candle, and what is our target? Our target is 11,925, and exactly this is the position. Without hitting our stop loss, it went up, and we should exit at this position, which is 11,925. And if you see, after that it has fallen down and even more fallen down, so we should stick to our plans and exit. So this is the Harami candle pattern. Today we received two trades back to back, profitable trades, and if we identify any similar green candle, yeah, here is again a big green candle, right? So this is a lower wick and this is a higher wick. We are expecting, like, when it crosses this higher wick, we'll take the trade, right? So the next candle is between these, and the next candle is still between these, and the next candle slightly went up but closed below, and next candle is still inside this two lines, and the next candle also tried to cross but closed below, and again all these are called consolidation, which means this is a great opportunity to take, where when there is a great consolidation, then there can be a breakdown or a very good trend upside. So as it is breakout taken at this position, you should enter at 11,925. And what is our stop loss? We cannot put this as our stop loss because the difference is huge. So as a retailer, we can only take half of this, and let's make 11,900 as our stop loss, which is 25 points less, right? So our target is 11,950 points here, so which is 75. And here the market is closing today, so the closing price is 11,935, and we can exit in this position or we can wait for tomorrow. But what I prefer is exit the same day. If you are in, even though you are in profit or loss, exit on the same day as an intraday trader. I hope you understand what is Harami candle and how to trade, how to set targets and exit profitably in the market. To get good profit, this strategy works 70 to 80% of the times. If you want to make it 90 to 95% of the times, you should reduce your targets. Instead of 1:2, make 1:1 and make multiple trades and get good profit. I hope you understood how a green candle is formed and how a red candle is formed, and what is the Harami candle and how to trade in Harami candle pattern. If you like this video, like, share and subscribe. Thank you. Let me know your thoughts in the comment section below.